Hi, I'm Jacob Murad, President of KPA Lawyers. In this third and final video of the Methods of Business series, we're going to talk about corporations. In the first video, we talked about sole proprietorships. In the second video, we talked about partnerships and the different types of partnerships and why you would use it. And only now are we going to talk about corporations. Again, I started this video series by saying that you don't necessarily have to incorporate when you're just starting out your business. The reason I'm saying that is because corporations are costly, they're complicated, and they have to be maintained and upkept. You can't simply start a corporation and then leave it there. Or rather, you can, but you may be liable and have to deal with a lot of people sending you mail for the rest of your life. And I'll explain why. So corporations are a separate legal entity. Once you create a corporation, you've now created effectively a person. This person has to file taxes. This person can sue and be sued. This person can do really anything that a person can do, but it's a legal entity. So the reason why it's so complicated is because once you create it, you need to make sure that it's maintained every single year. You need to make sure that it files its taxes every single year. You need to make sure that there's governance involved. So when you create a corporation, you immediately have to create directors, shareholders, and officers. Shareholders are the people that own the business. They have no management responsibilities in the business. They simply own the business, and they are ideally the ones that take the profits out of the business. They can also decide who the accountants and the auditors should be of the business, and they elect the directors of the business. Directors of the business, they oversee the business and they decide on fundamental changes to the business. Should we wind up the business? Should we sell the business? Should we change the president and officers of the business? That's all really directors can do. And also, do they declare dividends to the ownership group? And they are responsible to the ownership group, the shareholders. The last group are officers. President, vice president, secretary, any of the employees, really. Those are officers. They run the business. They sign checks for the business. They open the bank accounts. They sign the contracts. They run the business and they report to the board of directors. So when you're creating a corporation, you need all three. Now, all three don't necessarily need to be separate people. I can incorporate a company and I can be the shareholder, the director, and the officer. But again, when I do that, and I start running my business, there's a chance that that issue of liability, that, hey, here's a separate person. It's not me, it's a separate person. So sue that person, sue the corporation. Courts don't really look kindly on that. I may be personally liable. And there's been lots of case law about this. And this is what I talked about in the sole proprietorship video. A lot of people just incorporate believing that they are now free from liability the moment that they incorporate, but that's not exactly true. Also, there are certain professions like lawyers, where if I incorporate a law firm, the lawyer does not get corporate protections. I would be personally liable. So it's very important that you understand before you create a corporation, why are you making it? Do you have shareholders, people that want to, let's say, invest money and get shares in the business and get a share of the profits? Do you have governance, people that are going to run the business and people that are going to oversee the business as directors? These are things you have to think about. Are there tax advantages? Because remember, if you're filing taxes at the corporate level and then you distribute profits to yourself and you yourself have to file taxes again, you could be double taxed. So if you don't properly take advantage of the taxes, then making a corporation might actually cost you way more than you need to. Now, having said all that, here's why people incorporate. And you don't have to listen to me. There's tons of great advice pushing for why you should incorporate. But I'll just say a couple of reasons now. One thing is the everlasting lifespan of a corporation. Corporations last forever. There are corporations that are hundreds of years old. Disney, I believe, is celebrating its 100th anniversary. So the reason why that's important is because if you want to leave your business to your kids, incorporating might be helpful in that respect. If you had a sole proprietorship and you passed away before you can leave it to your children, then you might have a problem. So when you create a corporation, you can make sure that you structure it such that when you pass away, it continues. Someone else can get the shares, someone else can then nominate directors and officers and keep the business running. So the unlimited lifespan is a good thing. Another pro is there are good tax benefits to incorporating. In some cases, there's actually a smaller tax rate than if you were a person. And if you balance the tax filings correctly and you use an accountant to help you, then you can save on taxes on the income coming in and on the income that you're then investing outside of your company. But another very big one is when you want to sell your business. If you've reached a point you want to retire and you've built real equity value in your business, you can sell your business. And if you own all the shares, and if you meet a certain amount of criteria, you can actually sell your business and keep the capital gains tax-free. That is similar to when you sell your principal residence and you get to keep all your money tax-free. Same thing here, so long as the business is private and Canadian and it meets other eligible criteria. And again, you can give us a call if you'd like to talk about that. But those are really, between those two, the good tax consequences if used correctly, the unlimited lifespan, the ease of raising money, because most people are looking to either buy partnership units or shares in a company. So you can raise money through issuing shares to new shareholders and investors that want to come in. So that's something to consider. And then, of course, there's the distinct legal entity, so that in most situations, if you're running the company, you are not necessarily personally liable for the acts of the company. It's not always the case, but most of the time it is. So those are the main features of the corporation. So when you're starting your business, really consider that there's different types of business formations: the sole proprietorship, the partnership, and all the different types of partnerships: general, limited, and limited liability partnerships. And then there's corporations. One other thing about corporations is corporations can either be provincial or federal. And why you would incorporate federally is if you were going to be doing business in many provinces and not just one. The problem is there are certain extra requirements you get when you want to incorporate federally. So again, if you're just starting your business, unless it's some sort of import-export type of business, or something that really required a federal type of incorporation, you can look at your own provincial records and you can incorporate provincially. When you incorporate, you are automatically assigned a number and you are a numbered company. If you want a name, once again, you have to go and search to make sure the name is not taken, and you can register the name of your corporation. You don't have to register for a business license. Once you've registered your name, that's your name. There's many other components to a corporation, and we can talk about that on maybe another video, or if you give us a call. But the whole point of this video series is so that you understand that when you're starting a business, don't just think, oh, I have to incorporate. Really consider that there's other options out there. And I haven't even touched franchises, license agreements, charities. But the three major ones are sole proprietorship, partnership, and corporations. Thanks for watching. And if you like these videos, please don't forget to click subscribe. Bye for now.